to this week's look at the state of the New York City real estate market. This is for the week of September 22nd to the 28th. Wow, this is crazy because it's October almost. It's going to be October in a couple of days. All right, well, fall is certainly flying by, and we're going to be talking today about what's going on in the New York City real estate market. We're going to talk about everything from the luxury market to the overall happenings in the Manhattan and the Brooklyn market. At the end, I'm going to wrap it up. I'm going to give you some great strategies if you are an active buyer or seller. Also, share some additional market information with you about mortgage rates, where those seem to be going, and also just some additional data points about the New York City market overall. There were 23 contracts signed in the luxury market last week. That is 2 more than the previous week. So we're definitely starting to see that luxury part of the market, properties priced at $4 million and above, really starting to re-engage. Buyers are definitely engaged with the luxury part of the market. The top 2 sales were sponsor sales. First one was apartment 38 at 111 West 57th Street. It was asking just under $20 million. It was reduced from just under $23 million when the building started marketing off of floor plans back in June of 2016. This condo has almost 4,500 square feet. It includes 3 bedrooms and 3.5 bathrooms. Features a 36 by 21 foot great room with 14-foot ceilings overlooking Central Park. Primary bedroom measuring 22 feet by 14 feet, also overlooks Central Park. The monthly common charges and taxes total a little over $24,000, and 49 out of 60 units in the building have closed so far, averaging a little over 4,500 a square foot. The amenities include a concierge, a fitness center, 82-foot pool, lounge, terrace, and a private dining room, plus a covered driveway entrance. The number 2 contract was Townhouse 3 at 33 Park Row, asking $19.5 million. It was listed in June of 2021. This is a duplex condo. It has a little over 5,400 square feet, including 5 bedrooms and 5.5 bathrooms. Dramatic great room measures 39 by 20 with 21-foot ceilings, all overlooking City Hall Park. Upstairs is the primary bedroom and the second bedroom, and there's a mezzanine that overlooks the great room. The amenities in this building include a 24-hour doorman, fitness center, rooftop terrace, screening room, and a residence lounge with a kitchen. Monthly common charges and taxes for this unit total $19,544. 24 out of 33 units have closed, averaging a little over $2,300 a square foot. The total weekly asking price sales volume for last week, $184,315. Average asking price, $8,013,696. Median asking price, $6,250. Average discount from original ask to last asking price, 10%. Average days on market, 931. I'll give you a little more information about what happened in the luxury market at the end of this report. Let's move on now and get into what is going on in Manhattan and Brooklyn. As always, any questions, post them below or reach out to me directly at Sotheby's. We'll start with Manhattan. Over this kind of holiday-shortened week, we saw the supply continue its seasonal increase. It is quickly approaching the level we saw this time last year. Question now becomes, how much more inventory are we going to see? Will it continue to move higher? We just don't know. The demand, which in Manhattan has yet to really get going, is now 1% below last year's level. Again, makes us wonder what this fall market in Manhattan is going to be like as we move through it. We are, in short, we're seeing the inventory going up. However, we are seeing that the demand has yet to really kind of kick in. Supply for last week in Manhattan down a little over 23%, 393, contract signed 173. That's down a little over 12%. Off market properties, 112, down 32%. For the month, new supply, 2,038 in Manhattan. That is up almost 168%. Contract signed down almost 23%, 696. Off-market, 625. That is up almost 7%. This market pulse rating continues to show us in a relatively neutral, balanced place. And the liquidity pace chart, 696 contracts signed over the last 30 days. That is down a little over 16% from last month and down about 4.5% from last year. Brooklyn is telling a slightly different story from Manhattan. Remember last week we talked about how the Brooklyn fall season really had yet to kind of kick in. While that's still mostly true, with supply beginning to pull back a little bit, even as the demand is beginning to ramp up. Despite the holiday shortened week last week, Brooklyn's liquidity and contract sign increased. As I've pointed out to you before about our data points, that is really just kind of one way of looking at it, but it really does come at a time when we would be expecting to see the demand picking up. Perhaps this is going to be a productive season in the Brooklyn market, and certainly as we're comparing it with Manhattan, we are seeing those differences, not as much the supply pulling back, demand starting to kick in. Let's take a look at the numbers for Brooklyn for the week. 218 for the supply, down a little, about 7.5%. Contract signed, 124. That is up almost 11%. Off-market properties, 61. That's down almost 26%. The supply for the month, 1,033, up a little over 54%. Contract signed, 472. That is down a little over 17%. Off-market, 327. That is up almost 17%. The market pulse in Brooklyn is still relatively neutral. However, it does look like it is favoring the buyers a bit here. So let's see if that continues. The liquidity pace chart, 472 properties went into contract over the last 30 days, down 11%, and basically the same as last year. Okay, that's it for Brooklyn. 23 contracts in the luxury market were signed. 4 of those were in the trophy category, as I mentioned. That is up 2 contracts from the previous week. 19 were condos, 3 were co-ops, and 1 was a townhouse. 12 were uptown, 11 downtown. Basically a split there. Some additional data points about Manhattan and Brooklyn. The supply in Manhattan, 6,845. In Brooklyn, 3,540. Pending sales in Manhattan, 2,907. Brooklyn, 1,826. Off-market property totals in Manhattan, 3,940. In Brooklyn, 1,855. Average days on the market in Manhattan, 78. In Brooklyn, 58. Liquidity pace, 30-day moving window, 696 for Manhattan, 472 for Brooklyn. Let's talk about mortgage rates now. We saw those mortgage rates tick back up slightly after the Fed cut last week. It really begs the question, at least as we're seeing it in Manhattan, because Brooklyn seems to be picking up despite this. Luxury market, we know, is largely a cash market, but in the Manhattan market, is it the slight uptick in the mortgage rates that is kind of causing buyers to hold back a little bit? Or will some of the buyers who are holding back right now decide they're going to jump in and try to get something done in this market? Some additional charts. We're going to take a look at the seasonality. So let's start with Manhattan. While Manhattan's seasons, typically well-defined and mostly uniform, do show some signs of individuality across neighborhoods. This is The sort of key takeaway in these charts is that not all seasonal forces are equal. So therefore, while fall might provide a bump, as within the year, we see that depending on location, price, and other factors, the fall market could be kind of a bigger market, or let's call it a less big market for any given neighborhood. I think it's also a really good reminder that all real estate is basically location, location, location. The Brooklyn chart is showing that, all kinds of things are happening there. The main areas of Brooklyn just seem to follow their own path. Seasonality is a completely different pattern depending on the area. It may be that buyers will find that there is some leverage when one area kind of gets saturated. They may find opportunity in another area that is not feeling as much kind of pressure on the market. Again, location, location, location. I think this is kind of a good reminder of how local all real estate really is, whether it's in Manhattan or in Brooklyn. What does this all mean? If you are a seller, this is good information for you to have. Take a look at those charts. See where you fall in that. If you see that your neighborhood is a very strong neighborhood in terms of demand, then you're likely seeing that you're getting a lot of showings and offers. If you're not, for sure, it's your asking price. So be sure you address that within the first few weeks of being on the market if you are not getting the action that you want. If, on the other hand, you're in a neighborhood where it looks like there's a little bit less demand, then you're definitely going to want to be sure that you position yourself for success by making sure your asking price aligns you with the market and also positions you as the best in your category. Buyers, you can take what I said to sellers and apply it to your own situation. You're just on the other side of it. Look for leverage in those areas that don't have as much demand. If you find a property that you like, if these rates work for you, great. We're not really hearing anything about the rates really going back down. The Feds are predicting another 2 cuts to the Fed rates. So given what happened last time when the mortgage rates went up when the Feds made their cut, who knows? Don't have a crystal ball, but keep an eye on this, because if you're waiting around for mortgage rates to really go down, that may not happen during this fall market period. So if you need to do something, look for opportunity elsewhere if overall these rates can work for you. That is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.